Canada's jobless rate ticked up in March with uncertainty over tariffs weighing on employers. What does this say about the Canadian economy? What does it mean for the Canadian dollar? We are joined by Earl Davis, Head of Fixed Income and Money Markets at BMO Global Asset Management, and Karl Schamotta, Chief Market Strategist at Corpay. Great to have you here, guys.
You as well.
Earl, obviously the stories are linked. The weak Canadian employment, companies were wary. They knew that the tariffs were coming. So what would you read into this job disappointment today?
Yeah, so I look at it from the lens of a central banker, the Bank of Canada, and what does it mean for the next meeting? I think it increases the possibility of an ease. The market's only discounting a 50% chance of a 25 base point ease. I believe this increases it and allows them the opportunity to ease in the next meeting. Kind
of like Jay Powell of the Fed. I think a lot of observers think he may not want to cut rates, but he may feel forced to.
Yeah, and what this number does is it allows them to look through inflation or sticky core inflation, because now they could say it's a growth story. And unemployment leading, or the unemployment rate stayed the same, but the job losses are a leading indicator of that.
Karl, presumably, unfortunately, we are going to get more job losses with this trade disruption.
Yeah, it certainly seems so. We're looking at a lack of confidence among Canadian employers, among consumers. Businesses overall are pulling back on investment plans, on hiring plans. And what all of that means, to Earl's point there, is that we're really sort of wiping out that early year boost of activity that we did see, right? It did look as if the Canadian economy was finding its feet, and that is now gone. And unfortunately, it doesn't look as if even the announcements this week are going to alleviate that lack of confidence all that much. So we are going to be looking at further weakness in job numbers in the months ahead, and that gives the Bank of Canada a reason and the room to begin easing rates more dramatically.
I suppose employment is famously a lagging indicator.
Exactly.
But the Bank of Canada will be watching this closely.
Yes. The question now is certainly what consumers do ultimately. There are some signs that consumers might stabilize at a lower level, and that might mean that we don't see layoffs accelerate. But at this point, it's clear that there's a lot of slack in the Canadian economy. Price demand is not all that high from a domestic standpoint, and so it really makes sense at this point to bring rates back closer to neutral and give the economy a little bit more room for growth.
In Canada, do we still have a restrictive rate policy?
Yes, depends on how you measure it, right? Of course, measures of the neutral rate are always highly theoretical. They're almost a religious phenomenon. But when we look at just simply the pace of inflation relative to where the rate is, we're still in restrictive territory. And even from a theoretical perspective, we could go below 2% and probably still be within that range. And I don't know if you would agree with that, Earl.
I fully agree with that. I'd say, what's neutral is arguable. Our outlook, or my outlook personally, I saw terminal rates at 2%. I now think there's a higher probability we get to 1.5 by the year end.
That's pretty close to negative interest rates.
Yeah,
in real terms.
In real terms.
Yeah, and the reason why we have to get there, with everything going on, and as you said, the unemployment number didn't even take into account the tariff announcement or Liberation Day announcement, we got to get into easing territory, stimulative territory to offset this uncertainty. So, it's increased the probability of terminal going lower for me with a one handle for sure, or 1%, 1.5% by year end.
You guys, you've been studying economies for a long time. Let me give you the floor, Karl. Were you stunned by the scale of the tariff announcements yesterday?
Not exactly. I think, this has been articulated for a long time in the sense that, Trump loves tariffs. The question I think I'm really asking myself isn't so much about the scale of it, it's the motivation, right? And the crazy thing is, as much as, we have all these talking heads out there and pundits and observers looking at this and trying to interpret what Trump is thinking, and even administration officials giving rationales for what he's doing, it still isn't clear why he's doing this, right? If he was trying to reduce trade imbalances on a global basis, especially the U.S. relative to, the economies that were tariffed, this would not be the way to approach it. So the question is, why is he doing it? And when you think about that and and think about the sheer unpredictability at the core of that, it means that there may be a lot more creativity in other policymaking in the months and years ahead, right? We could be looking at major changes to how the global financial system works in addition to how global trade works.
I'd like to hear more about that, but just very quickly, hasn't he been explicit, though? He wants manufacturing back in the United States.
Yes, that among a bunch of other things, right? He also wants the dollar to be strong. He wants, fentanyl to stop being shipped across the border. He's very angry about immigration. All of these things are sort of put into one big basket, and tariffs are meant to solve all of them. And again, if you were trying to address trade imbalances, you would not use the calculation that they did use to apply the tariffs.
The seemingly arbitrary calculation.
Arbitrary is like a good word for it. It's, quite literally, it's a calculation that goes against what he's trying to achieve. And so that's really the core question, is if he is really trying to, reshore manufacturing to ensure sort of an independence in the U.S. economy, what would he be doing differently? There's a lot of things he could be doing differently. And so I would say that the jury is still out as to what the Trump administration is ultimately trying to achieve here.
We got to take a break, Earl. I want to get your take, of course, on those that tariff shocker yesterday. We're